All right, that's enough. Very good. What's up, Danny? How you doing? Let me do this today. What's up, guys? Welcome back to another episode of 0xResearch. Today, I'm joined by the main host, Danny, as his side host. Although that might be changing very, very soon, but we haven't disclosed that yet. Thank you for joining today, Danny. I know that your portfolio is hurting. How are you feeling?
Yeah, markets are tough out there. It's
great bet.
Yeah, non-alcoholic, just enjoying crisp drink in the morning. No, yeah, personally I'm doing okay. I've been pretty flat most of the year, like holding some. I was all in crypto beginning of this year, was out of a lot of things after the Trump trade. That was kind of my risk off moment. And then I've held some BTC for most of the year. So obviously that is down a lot the past 2 months now. But doing okay. But yeah, clearly there's a lot of red in the markets. So how are you feeling, Mr. Boccaccio?
I'm feeling good. I'm not drinking at 7 a.m. in the morning like you are. Not many people realize that Danny's in PT as well, so he is just cooking.
Yeah, it's 6 a.m. right now.
No, I'm doing okay. It's the thing is that when you are in dog check, very good. When you are in the bull, it feels as if nothing can ever go wrong and you are on top of the world. And in crypto, I think it's extra amplified because, I mean, stocks have performed better this year, but like, when crypto goes up, it really goes up. Like things go up 30, 40x. So when you start seeing downside action, you're like, oh, I imagine a lot of people also got hurt. Like I was talking about this with James Kristoff, who might also join the pod today, but like a lot of people are always, they're like, oh, like 10% dip bid, 20% dip bid, 30% dip bid. And now I don't know what we're at. We're not at like 40%, but I think we're at like 35, 36%. And then, I mean, you don't have any money left to bid. And the idea was, so we had the super cycle talk last cycle, and then a lot of people were like, oh, that's just a meme, it doesn't happen. And then this cycle we did the exact same thing where like 4-year cycles are fucking dead. TradFi is here. Passive flows, infinite bid into BTC, we're gonna go up forever. And then the cycle bros were right. Like we're literally following the 4-year cycle. I think we're like a month ahead or something, or like a month behind or something, one of the two. But the original question was, how are you feeling? I feel fine. I feel okay. I definitely should have sold more. I caught it very late, like the whole thing. Actually, one of our analysts, as if he's not like, as if I run a fund, Luke, who is at Blockworks Research, 0xMever on Twitter. I don't know how to say his name. It's a weird name. Anyway, he unironically got upset with me and was like, you should sell some. And I was like, yeah, fuck it. It was like 96K. So I think I slipped away okay, but I don't know. I imagine a lot of people are still hurting. I was also not in a lot of alts. I think you were also not in a lot of alts. I feel like a lot of people are very heavily in alts still.
Yeah, I think this is a typical crypto thing though, right? Especially if you're in alts or things with no fundamentals, then yeah, I mean, the retrace could be pretty bad. So yeah, we've got our producer here backing us up with some numbers. So 35% down on BTC, 50% on Sol, 45% on ETH from like the recent highs of just a few months ago. So yeah, I mean, it's a pretty significant pullback, especially basically, back to kind of where things were, so to speak, in April this year, right? We're kind of re-entering those levels, like low 80K, near 70K for 70K mark for BTC, and Sol getting back down to the kind of low hundreds, and ETH kind of re-entering the 2000s. It's looking quite similar to how prices did first couple of months of the year.
Yeah.
So yeah, I mean, if you were expecting, if you're one of those ETH to 10K guys, you're probably a little disappointed. Tom Lee still gave you a nice exit opportunity if you wanted to take it. He shipped yards into the coin for you to let you sell as much as you wanted to him. So if you didn't do that, that's tough. But I guess maybe the broader question here would be, you mentioned like the cycle bros ended up being right, but I don't know that you can say that unless you don't see BTC higher in 2026, 2027, right? Because I guess the hallmark of the kind of cycle theory would be that we sort of break down for 2 years or something, and we don't see new highs for multiple years to come. But
Talking
BTC
about
could go
that,
higher.
it's the fucking devil is here.
Hello, boys. Noah Goldberg mode in the building.
Goldberg mode. I've never seen anybody happier than Noah when I'm funny. My goat.
Yeah, he was airing out DATs in the 0xResearch Telegram chat last night, so he's having a
Yeah.
great time right now.
I'm expecting a large, bulky post from him probably this weekend. A lot of people want to go out, like, financial markets are down. You want to go out, you want to hang out with friends. Noah Goldberg's we're going to write a hit piece on DATs, which I think is going to be fun for him.
He's going to lock himself in his office and get to work on it.
Yeah, that's good. With regard to the long bear, I don't quite understand the dynamics of that selling that well. And I think I'm sure there are much smarter people than me who will be able to help with this. Maybe we should have on James and maybe Noah as well. I feel like he would be very angry at this topic and probably really enjoy talking about it. But something I need to understand is that selling and how much that can sell and how low prices can go, because that's like really it, right? Like that'll affect the bear market situation. It is a bit concerning that also video earnings came out well and then they still dumped. So I don't know. There's just, and people are saying like, oh, like it's because of 1010. And it's like, well, I don't think Nvidia is dumping because of 1010. I think there's something wrong. It's really like crypto has been not a great investment this past maybe 6 months, except for ETH, which was fine for a bit because of that buying. One thing you mentioned was like, if you're not buying anything with fundamentals and they dump, I mean, people were buying things with fundamentals and they still fucking dump. Like Pump is doing 1 mil buybacks a day. That's, I feel like, as fundamentals as you can get within crypto. I mean, we're going to ignore whatever like secular meme coin industry decline that people want to say, but like, that nuked.
Yeah, I feel like we talked about some of those things. I just think the bigger point there is like, if you're bonk guy, no offense, the thesis is that like more and more people are gonna kind of mindlessly long the thing that's just a meme. You're not buying useless coin if you're worried that the entirety of the market is going to zero. You got other things to worry about. So like, it's like especially more impactful if we're going to like a kind of a risk off. I'm not like saying anything particular about. I don't know what's going to happen in the market. Nobody does, but it's just how people are. You're not aping useless coin when the entire market dumps 40% because it just doesn't make sense. It's not what people do. So, and you can tether yourself to say like, oh, Hyperliquid is still making $2 million. Therefore, maybe I'll even add at these prices or what have you, right? Like the market's giving me this at a discount actually to what I would pay for it anyway. Yeah. Whereas with like pick anything that is just like really an attention or like a FOMO kind of thing. And once the momentum is lost, it's like that was the reason to buy it.
Yeah, we have a guest come in. I'm going to add him on stage. Danny, you have very little context on this. I realize I took the stab at this and did it, but we're gonna have fun. All right, what's up, Thanos? Wait, let's Can I call you by another name so it doesn't feel like a Marvel movie, or should we go with Thanos the whole time?
Thanos snapped.
You can go with Thanos, but up to you.
Okay, very good. What's up, Thanos? Thanos is from Kirok, Danny. He is a friend of. Are you familiar with Jakob, our other analyst, Danny?
Yeah, Shonda Devins.
We have Shonda Devins. Thanos, welcome to the show. Do you want to give a short introduction of yourself, and then I'm gonna bother you with how Kirok manipulated the markets on 1010? Are you excited?
Great, nice. So yeah, I'm Thanos. I'm part of the Kirok commercial team, more so on the DeFi side. So yeah, I'm a Didson at heart, and try to be in the trenches as much as possible. Although the trenches are not really nice right now, so it is what it is.
That's right. What is your we were just talking about our reads, but what is your I guess like broad view? I know you can't. I know not nobody has like a market. You never want to give market thoughts when we're dumping like 40%. Like I don't know where we're going anywhere. But I guess like what did you see this coming, or were you very shocked at like the amount of selling over the past maybe 2 weeks?
There's a few things. Like first of all, it's kind of convoluting because I'm at Buenos Aires right now for Dev Connect, and it seems like mostly everyone is like unfazed by the market, which is I would not expect. Like I would expect people to be in pain, or at least say they're in pain. And it seems like everyone is kind of focused on their lane and just doing their thing, and they're fine. Yeah, maybe they're not buying Lambos or anything like that. Thank God, actually. But yeah, they're doing their job, I guess. So that's a positive in a way. Now, in terms of market conditions, you can ask Jacob as well. I've been telling him that I think the market is done since the summer privately.
Wow.
I've been out of the market personally for a while. So, like the science, the thing with the cycle theory is like we always think it's going to change. And unfortunately, until now, it has not. And it proves again, probably, that it may not. I don't know. I'm not a market wizard, but the signs have been there. So, like uh, everything from like token dilution to incentives being thrown out in the market, and extreme saturation of token issuance, which counterintuitively is something we are supporting with liquidity, but uh, at the same time, a lot of companies, protocols, and token issues should not have a token in the first place.
Yeah.
So yeah, I think all of that stuff really impacts the market in a way. And then when you add on top situations like in October and the 1010, doesn't really help anymore. But you do see at the same time, TradFi coming into the market, no matter what happens in the actual bubble that we have within crypto Twitter and etc. Like you saw, Kraken IPO, Kraken investment from Citadel, everything on that side is like massive amount of tickets that we're not even like comprehending at this point, right? So I guess people are recognizing that in a way in the adoption, and it's like, it is fine. It's going to be fine as long as you're long-term focused. You don't just blow yourself out in perps or anything. You're going to be okay.
I want to follow up with two things off of this. So first of all, this token dilution thing, or like we have too many tokens. I feel like that's something I haven't heard in so long, and it's true. Do you still think that's an issue? Like with, I guess, the meme coins dying out and stuff. Do you think we still have too many tokens?
Yeah, for sure. I would argue that sometimes meme coins are more useful than the utility or governance tokens, because at least there's a hardcore community that gets created around it, at least for a momentarily, time. Maybe it's not long term, but it happens and it creates some type of community and vibe. For the protocols and general token issuers, yeah, I think sometimes you just don't need a token. Uh, you need to
Yeah,
find product market fit on your protocol, make money as a labs entity, and deliver products that the users will use and want to use, and create a community around it. Now, if they do want the token as a community, and it has value accrual mechanisms where they want to participate in and almost become like an equity, right? Then fair enough. Then you should do it. But unfortunately, until now, it was a bit tricky with regulatory, right?
yeah. It's kind of ironic because from what I understand, like in TradFi, we have a lot less public equities. Like a lot of the larger ones are just staying private, like Stripe. And then in crypto, we're like tokenizing everything. I don't know if it's going to work out, but I agree with you. I think a lot of the times these companies should just stay private and just make money for themselves and like investors around them. And like you can at some point IPO or make a larger thing.
Yeah,
One,
because you cannot imagine how painful it is for the teams to go through a TGE process, and then having a token where every day they probably get spammed by all their community, like, why is the token down, why is the token up, why is the token whatever, right?
yeah.
And it's distraction for them.
Yeah. Yeah. I mean, I couldn't, like, I'm stressed out about some of my tokens, and I can't imagine how bad you must feel if, like, because on paper, I know they probably know that they shouldn't do this, but I can't imagine if you're a founder and you own 7%, 10% of something, and you just, like, you have that figure in your head as, like, oh, like, this was worth X amount. Like, I can't imagine going through that through a bear market, like, however long the last one was, like that many months, I would not be able to do it. It would be tough. The second thing is kind of related to this. Danny, I also want to get your thoughts on this. Jesse's token yesterday. What is the? Do you guys have a hot take on this? What do we think? Danny, you can go first if you want.
Yeah, I just think, I don't know, poor execution. Like, I don't think that like pre-announce, like, if you're familiar with kind of the meme coin trenches space, then if a popular figure pre-announces a coin, then snipers are going to be scanning the chain, like the block explode. Even if the name, I mean, he announced the name of the ticker, so it would have been pretty easy to then find it, even though sure there's going to be people spinning up copies of them, fakes, whatever. Those guys will find a way to like snipe the right contract immediately when it goes live and then dump it on everyone's heads. So I think it was kind of set up to for a little bit of failure here. And I don't know, it just doesn't help that like the history of Base and Zora and Jesse the past few months has been like, hey, we're launching another meme coin, or like now we're meme coining every post. And they like they hype it up for a week or two and the metrics run up. And then it kind of loses steam. People forget about it. They get mad about it. They forget about it. Hypes up the next thing. People forget about it. I think we've just kind of seen this play out over and over again. And this just feels kind of the same. I don't know. I think people are a little tired of it. And I would guess that's probably like the general feel. And it doesn't really help that like the broader market is down going into doing like a stunt like this, I guess, if you want to call it that, or a test. I think he called it a test. So yeah, I don't know. Wrong place, wrong time is my feel. Poor execution, not reading the room. I don't know, a couple of things.
Is the test that they're doing just farming sequencer fees at the end for Coinbase? I mean,
Could be part of it.
Yeah, I don't know. I felt like it was like 9 months late, 10 months late, maybe, of a thing. Like, I think if you had done this like pre-Trump, or maybe even post-Trump, January, February, you would have done better. It would have been more interesting.
I think they've been trying. Here's the thing: is like I'll give it to them that like they've been trying. Like they're kind of late to the meme coin thing in general. than like the Solana ecosystem. Like, I don't know, I feel like Base in the EVM side of things, they were pretty slow to accept, and then were like, okay, no, actually we should do meme coin trading. And then they went all in on like everything should actually just be a coin. Like, let's just trade all of it. And I don't know, I think after like a few efforts to like really pump that up, it just like was clear that there wasn't like enough interest in it right at this time. Like, maybe there'll be a different time in the future or a different format where it will be more interesting, but I don't know, it feels like they're trying to force something that the market is like not, just doesn't want to play.
But again, like, like we end up in the same topic, like saturation, right? And if the industry or the space doesn't grow in terms of like total users, total retail, then we're just circling, gains and losses between each other, and it's really like not healthy, actually.
Where do you I guess like one thing you brought up is that the external capital isn't actually not interested, like with Citadel investing in, or like I guess the Kraken IPO in general. Is that like the next liquidity um, flow coming in from? Because it was meant to be the ETFs, and I feel like the ETFs have, and then it was meant to be the DATs, and then I felt like the DATs have just not, in my, from what I understand, they just haven't helped as much as, in fact, they've been kind of a hindrance. Is that the next step is just like external capital gets more and more interested and just starts investing more and privately into crypto?
I think it will be like a domino effect in a way where, uh, let's say, external capital, TradFi, and like anything that is not crypto native, either tries to go aggressively by themselves into crypto and invest a lot of resources, infra, and etc. Or they just go big with crazy tickets to, like exchanges, institutions, anything that is essentially already there in terms of crypto. They have the infrastructure, they have the connections, they have everything, and they just become major shareholders of those companies within crypto, and they are kind of facilitating in a way the entry to the space, for those type of institutions. Because I mean, to be fair, let's say, I don't know, like Citadel, right, or JP Morgan, like, okay, maybe they'll try like have the private blockchain or something to settle transactions, but at the end of the day, it's a nightmare for them to go on Solana, Ethereum, or anywhere else and do like public trades, trade on chain and go through that process. So at the end of the day, they'll probably end up trusting the institutions that are already here in crypto.
Yeah, this to me, one thing is like, from what I understand, these large market makers can't trade on chain because there's too much illicit flow, right? Or like they can't get too involved in it. Is this
And
correct?
they don't know probably how to in the first place. Like, if we're talking about the TradFi ones, yeah, I don't think they want to yet. They make already too much money, right, on their own business, so they don't care. And sometimes it's just easier to throw your balance sheet to someone than doing it yourself.
Yeah.
So yeah.
Let's talk about less depressing stuff. Thanos, what are you interested in crypto these days? I'm gonna guess perp stuff and AMMs, but that's also because I was kind of told by Jakob. But you can tell me what you're interested in. What's like cool to you?
To be fair, right now not much, but I think we are getting there, at least on the tokenized security stuff. Everyone is pushing the boundaries for once, and trying their best. And like, I feel like perps on stocks is a good instrument, but as long as you don't have the let's say the collateralization behind it with the spot asset, it becomes just painful for everyone, right? So I think we need to reach a point where we essentially are cross margining, equity perps with the actual like stock, which means you need, a lot of like equity essentially on money markets, good risk management, LTVs, etc. Although, with lower volatility, it's relatively easier to do, but then still you need to implement it. And I think, especially hyperliquid, probably that's going to happen sooner than anywhere else. And that will probably help have more like retail actually coming on chain, because I mean, it's nice trading on Robinhood, but what if you can make extra yield on your spot asset by doing, let's say, a cash and carry trade, right, on Tesla? So I think that is very interesting. Then in general, like, I still believe that the yield markets are the fixed yield markets are underrated, and they don't have enough like flow, trading activity, and in general attention, because in TradFi that's like a multi-trillion-dollar industry. And here, where I mean, we're still struggling with like Pendle and then other like chains with smaller protocols. So yeah, there needs to be more of that.
Yeah, and on all of the other chains, it hasn't really become particularly relevant. Like, it's really only relevant on Ethereum and the EVM. With perp equities, stock perps, how the hell are they going to figure out weekends and holidays? Because I assume you guys have considered or are providing liquidity into these stock perps at Rock. Like, how do you price that? Or like how do you expect them to price it?
It's all about risk management, but it also depends on how the protocol itself uses oracles, etc., to price it. But at the end of the day, it's all about being very, very prudent on managing risk, and doing a lot of math behind it, and back testing, etc. And usually what you'll see happen is on the weekends, you probably have still like liquidity being called on both sides, but as the weekend goes on, and maybe let's say there's some type of directional move on an asset, you probably see, of course, lighter bid or ask, depending on what's the direction, until Monday comes, all the markets open, etc. But there is so many instruments out there that you can use to like help to hedge your weekend exposure already in TradFi. So I'm not really worried about that. As long as it's done prudently, it will be scalable.
Yeah, interesting. I imagine a lot of them. I don't know how familiar you are with the landscape. I'm just gonna throw out some names. Like Best Markets, they do 1% fees on the weekends, which to me, like, it's a fine way to deal with it, but it's like it's not great. I imagine like a lot of the HIP free ones are just gonna like have lower liquidity and like higher spreads over the weekends, just to like make sure that not a lot of people trade, to keep it as low as possible. I'm just curious if it will ever come to that point where it's like actually very, because after hours now trading is not like, it's less liquid than during regular hours, but it's still relatively liquid. But like weekends, I don't know when it's going to get to after hours. I don't know if crypto is going to help it get to after hours, or if like, I don't know, Robinhood needs to adopt it instead, or interactive brokers, etc.
I mean, there is like over the last few years, especially with the rise of electronic trading, the after hours liquidity on TradFi has increased quite a lot. It's just about takes time, right? You will see probably some type of, as you mentioned, like matching between the crypto space and the TradFi space, where suddenly, actually they help each other in terms of the equities liquidity after hours and weekends. Because at the end of the day, there is probably going to be some type of edge between those hours, and anyone that has any type of like trading system that is good enough, they would definitely want to be there, right? So I think it will grow. It just needs time, and of course more collaboration between those two, let's say, sectors.
That makes sense. And with tokenized stocks, not equity perps, I can see the equity perp pitch very clearly. Options are complicated. slide the leverage to the right, retail magnet. Tokenized stocks, bit less of a pitch. Like I don't quite get. Danny, do you get that tokenized stocks pitch? I assume you get it better than me because you're smarter than me. But
I guess here's where my intuition leads me is that I don't know that I see it in the US per se, but everywhere else than the US, basically opening up access for anybody to bid stocks via the tokenized product seems like a good way to kind of arb various legal jurisdictions and just like offer a streamlined product. I don't know, what are your thoughts there, Thanos?
Yeah, 100%. Like, until recently, I'm based in Europe. Until recently, the only like broker that's out there was like interactive brokers and like some more like commission free or whatever platforms, but nothing like Robinhood experience, right? Like Robinhood is beautiful. Like you want to open the app every day and like do whatever. And I feel like that is a massive space, Latam, APAC, etc., accessing stocks. But then the other part is the cross margin I mentioned. When you start being able to use your collateral for relatively simple trading strategies, that can be also just tokenized, in terms of like a vault strategy. So you don't even need to do anything. Then, like what I would love to hold Tesla and earn like, I don't know, 5% extra annualized yield just because of a funding rate strategy. So I think that will be massive, but it takes a lot of infrastructure on the back end, of course.
that does make sense. All right. Danny, I want to ask about Monad and Mega ETH, unless you have something else you want to ask about.
No, let's do it.
All
Good
right.
topic.
I'm curious because you seem to have a correct, in my opinion, but a slightly negative opinion about tokens constantly launching. I'm curious if you feel the same way about new chains.
Depends. I would say more chains would be useful, but we do have too many. But new chains coming in, if they come in, they need to really be differentiated and have that either a massive community like Monad has, or like let's say the product market fit, or at least until we see it on mainnet of Mega ETH and the speed and etc. So, and it's hard to be differentiated because I mean most people have already tried a lot of stuff, right? So it's kind of a question of what can you make different, and at the end of the day, the difference that you probably can make is just sustainable like yield on the chain. All the different type of products available, from money markets to trading platforms to fixed yield, and just consistent liquidity.
Interesting. That makes sense. I guess like my very basic take is that I'm kind of against a lot of new general chains. I want like very app specific chains. Like I think I was wrong about this, but or at least like wrong now. But at the time when Plasma launched, I was very excited because I was excited about like a neobank chain. I thought that it could be very cool. I have been proven wrong now. We don't know what the future holds, but right now I was wrong. But so yeah, like when like Mega ETH is cool because it's very like they're sticking like a massive computer into the sequence and they're like you're just gonna go fast. We're gonna build a bunch of cool apps around it. Monad, no disrespect to the Monad team, I've always said it, but it seems like a more general chain that like doesn't have a specific focus, and it has a community, like you said. I'm curious how long a community lasts when we're at like 60K BTC and everybody wants to kill themselves. Does that make sense?
Yeah, I think. Well, I hope nobody kills themselves first of all, but yeah, it's hard. General chains nowadays are just competing against the water, flow.
Do you have a strong view on like, you could look at Hyperliquid's probably the leading example of this. I would say Hyperliquid. I don't know why. Leading example of this, where it's like you build the Perps exchange. It's sure, it's a chain. It's not really a chain. It's a perp stacks, right? And then you expand out and offer other services like Mega ETH. In their case, they're going to have USDM. They're going to have their own kind of ingrained stablecoin. I don't know that Monad has any like app that they're sort of like ingraining into the chain itself. I guess you guys talked. I feel like you guys talked around this a little bit about like generalized versus like an app specific chain, but I guess maybe my question is like, is the future here really just build apps and like this concept of a chain just goes away and you're just really a platform offering services?
I think so, yeah, because you've seen, I mean, Aave announced their application this week. Everyone is trying to go the application, like mobile application route, where you just don't even know what's going on the back end, which I think, in a way, probably now everyone is trying to do it at the same time, and it's probably going to be a failure for the short term. But long term, I think that's definitely the way. I would love to have a better UX experience on the DeFi side, and that's how you onboard the next, like another billion users in crypto. They don't need to know that they're in crypto. Actually, they just need to know that, I don't know, they're using this on ramp. They'll get 5% USDC yield, and they'll be paying their groceries every day. And but in the meantime, it will be earning like yield. So in a way, the appification, I guess, of crypto will take some time. Probably you see a lot of acquisitions as well, I guess,
Yeah.
and a lot of synergies. But yeah, it just needs, like look at Revolut. Like Revolut has, you can do anything you want there. It has from just banking to points to crypto to FX. We need that.
Have you used their crypto side?
No, because I don't want to get rugged on the fees and the pricing. But
That's what I was gonna say. Yeah, it's I have a friend who I think pulled out not a lot of money, like a couple $100, and they just blocked his account. So like I never, and this is why I had like I first of all I completely agree with your take. Like I think mobile is the way to go, especially for apps like Aave, Etherfi, like things that want to act as a savings product. Now, Etherfi we can discuss because their cashback is with Squirrel tokens. I don't know if you noticed. I just found out about this, and I don't know how that can work. Like how that makes sense. But like these kinds of products, I think to me make a lot of sense. And that's why I was excited about Plasma as well, and I've already mentioned that I was wrong, so we don't have to talk about it again. But Thanos, I have a important question asked to me actually by Jacob. His question is, when will you be bidding hype? What is our but okay, in a more general thing, I guess like the 4-year cycle thoughts, how you think crypto evolves over the next, like, let's say 6 months, and it doesn't have to be a very professional opinion. It doesn't have to be a key rock stamped opinion. Just like how you view the market going forward, and for Jacob as well specifically, how you view hype going forward.
Yeah. So I feel like we will be caught off guard with the bear market cycle. Meaning suddenly now, in the next probably 3 months, everyone will be like, oh, the cycle is still happening. So then we need to wait another 2 years. And then that's probably when you start bidding and etc. I think it will be shorter. And that's where we probably get off cycle in a way in terms of pace. But it's like a consistent, like, let's say, review. Like I think of this now, but like maybe in 2 days, I change my opinion. I don't know, right? It depends on everything. So, but generally speaking, if I had to take a concentrated bet, I would say that I would be preparing around late summer into Q4 next year of buying everything and forgetting about it probably for like 2 or 3 years. Now, he has a lot of dependencies, right? And there's a crazy US president at the same time on the line that can change anything. So it's not as predictable as it could be. But in terms of hype, if I think it could be the Solana of the cycle for the next cycle. I mean, already has been in some way or form, but I think we're underestimating their capability to execute and capture the audience. So when you got my answer, where it's I'm not gonna say because I want to actually buy it there.
Okay, that makes sense. Okay, Danny, you got any more questions, or I'm gonna let Thanos go so we can switch to the other segment.
No, I think that was great. Lead him.
Wait, actually, let's do this. Last
ahead.
thing, Dev Connect takes, and then I'm gonna let you go, Thanos.
That's a good one.
How's the
Sure.
first of all? How's the food, and then we can go to this.
Honestly, Buenos Aires is amazing. I did not expect it to be that good. Food is awesome. Sometimes they tend to overcook the steaks in some restaurants, but which I did not expect. But yeah, it's pretty good. Dev Connect, as I said in the beginning, it feels like everyone is kind of like doing their thing, unbothered from the market. And there was a lot of privacy, like privacy booths, privacy talks, which I mean, good luck, but not my thing personally. But and I don't know much about it. But yeah, I think the Ethereum crowd has kind of rejuvenated in a way from the previous like 2 years.
That makes me happy. Blockworks gets a bad rep with Ethereum, but I've always been. I like the Ethereum aesthetics. Is how I would like to put it now. Like I like the Ethereum style. The token I don't love right now, but maybe the rejuvenation will help out and things will get better.
Yeah, definitely.
Okay, Thanos, I appreciate you taking the time to come on and sharing your thoughts, even though you didn't tell us when you would buy hype, which is okay. We'll get it out of you.
That's too much alpha.
That's too much alpha. All right, Thanos, have a nice day. Enjoy the Buenos Aires weekend. I hope you have a good one.
Thank you. Bye-bye.
Thanks for coming on. Fantastic.
That was the first time I met Thanos, and he told me that he sold in the summer, which makes me feel like I should have started talking to him a lot earlier as a person. Does that make sense?
Yeah, that's a nice way of putting it, I think.
Yeah, I wish I would have met him so that he could have told me in the summer that I
wish I would have met him so I could have talked to him sooner. I think we have more guests coming on in a bit. Before we chat with our next guest, I want to do a quick shout out to our sponsor for today, Katana. This episode is sponsored by Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenues. Follow the link in today's show notes to get started. Thanks so much to Katana. Who do we got coming on next, Bach?
We have Afif from Ethereal to chat about perps. But before we do that, what's on the shopping list? What are we buying? Not today, but at some point. Wait, I need to close it.
What are you buying? And then he walks away.
What are we buying?
And I mean, I like BTC. I think I liked what Thanos said, kind of about how, like, I don't know, you sort of had Ethereum 2021, you've had Solana 2024, you've had kind of so far hype 2025. We kind of find like a new thing that is like the outperformer in like each kind of subsequent, upward period for crypto. So I guess what I would say is I'm not 100% convicted on anything at the moment. My mind could be changed. Something I do like, shout out to Noah Goldberg. I think MetaDAO is interesting. I will say I don't own any, and I'm not buying any right here. But I like the idea of unruggable ICOs and this concept of like tokens converging towards traditional equity models with like more token holder rights. Like I think that's an inevitability, and we've seen it from like the better project stewards in the space, and what we've seen from the worse project leads is like complete disregard for token holders and a lot of disappointment. So I think naturally the market is like converging to that because people are done being, you know, kind of shit on when let's say if the product associated with their token gets bought out and then the coin goes to zero. That's a pretty unfortunate outcome. So I do think solutions like that, like, you know, maybe it'll be MetaDAO, maybe it'll be something else. You know, I don't have a clear answer on that today. Like, can't predict the future, but I think that the direction is positive. So I'll be keeping my eyes on that space.
I think that makes sense. The thing with, I think we have an event every month or so now that like proves that MetaDAO would have been very relevant. I mean, I don't know if you mentioned this, but I assume you were thinking of the Tensor base thing, and maybe I can give a short background on it.
Yeah.
Coinbase announced. Whoa, that's loud. Coinbase announced that they will be buying out the what is it called? Vector.fund? Vector.fund product, which was previously under Tensor. Now, Tensor used to be an NFT marketplace, and then they built out Vector.fund. We've chatted about Vector.fund on the pod a year ago, maybe a year and a half ago. I thought it was always a bit overcomplicated, but it was objectively like an interesting product in that it was a mobile app that allowed you to buy, sell, and trade crypto tokens. Like 1% fee, one of that like X. I feel like these popped up in like January as well, where they would just take like 1 to 2% fees and just made a shitload of money. Anyway, Coinbase acquired it, but what this meant was that the Tensor NFT marketplace product moved under Tensor DAO. So like the Tensor token now only represents the Tensor NFT marketplace, which is not as useful as the meme coin token terminal, which Coinbase has just bought. And it's like brings up that question of like, why ownership tokens? Like, do people owe us anything? Or like, how do you like? What's the difference between these different entities? It is very difficult. I don't blame the Tensor guys. Like, imagine Coinbase comes up to you and is like, "Yeah, we want to buy this specific product." You know, and like we want to bring your entire team with it. You can't really blame them, but also on the other hand, it's kind of a shitty thing to do to people who hold your token, especially if they bought because of Vector.fund. It's a tough situation. I don't know how MetaDAO can. The issue here is I think token launchpads are difficult because you can never own the entire thing, right? Like it's the same thing with Echo and Sonar. Like you can never own all of raises, and the same thing with Meta. Like you can't own all of token launches as MetaDAO. So it's like inevitably they're going to there's going to be some slips for the cracks, and some tokens will not launch from MetaDAO. So I don't know how it fixes the whole thing, but as an idea, it's a very good idea, and I'm very excited about it. I don't know if large VCs will use it. But what I've seen on Twitter and on like discussions around is that the gut reaction for venture capital investors is that, oh, this is useless. Like it's not really particularly important. Which is like if you're raising for a protocol, Danny, like will you accept investment from Multicoin and Dragonfly, or will you accept investment from 30,000 addresses generated by the same account who does like a $500 check from each account? You know, like it's the idea is very cool. It's just like a tough. I don't think I'm saying anything relatively new here, is why I think everybody who's invested in MetaDAO thinks of the same thing. I don't think it means it's a bad product. I just think like it'll have people who pick and choose, which to me is natural.
I agree. I think, I mean, to the one point, to the Tensor thing, it's like I guess if you were holding that coin, it pumped 10x, maybe partially on insider trading. So you did technically get a payout on a coin that looked like it was going to literal zero. So if you were in the thing, like that was your sell opportunity, I guess. I think to the point, like VC saying they're not interested in a product that gives people that aren't VC access to do sales or participate in raises that they otherwise wouldn't have. Like, yeah, I mean, of course they would say that, I guess is my thought there. I think maybe the criticism that I would expect here is that, and I think we've seen this generally with like doing an ICO or an IPO, whatever, on Pump or Believe, Launchcoin, like all these like ICM platforms, is that kind of the key pushback is maybe that you're sort of getting the a negative selection factor here, where only the projects who don't have enough founder credibility or like a strong enough brand to raise from a meaningful cast of VCs are going to go this route because they otherwise can't get the funding. So maybe there's like some negative selection towards the projects that like end up on these platforms. I think that's maybe one argument you could make, but I don't know. I don't really see a reason to be against a protocol that's about adding more transparency and rights to the token holders over the protocols that we're building here. I think that is a win, and probably objectively, like for VCs as well, they should want some of the token holder rights pieces, even if they don't necessarily like care about a particular protocol doing a raise like on a platform like this. I'm sure you would still love to have like a guarantee that, oh, my tokens have, some rights to the cash flows, for example.
Yeah. I don't quite understand how the dynamic for equity versus token works for VCs. Like, do they get two things to sell? Or do they just get to sell the equity before as well if they have to? Like, so I don't know if that affects them, but also a lot of this, like, the thing is, a lot of these projects are positioning themselves as like anti-VC sometimes. And we saw this with meme coins a lot as well, very early days. Like they just position themselves as anti-VC, and it's like it cuts out one very important participant. I mean, you can argue how much you like them, how beneficial they are. They're a very important participant, nevertheless. So you cut out and if I don't think MetaDAO does this, and I don't think a lot of the more serious ones do it, but there are some projects that like try and antagonize VCs sometimes. To me, that seems not like a very good idea. And I think, yeah, I mean, I can definitely see a way for them to work together. Like I said, I don't understand the incentives on the VC side at all. I have no experience in venture capital. I've written 2 angel checks in my entire life, both of them down. So,
yeah, I guess maybe what I would say, I agree with your, like, I don't think MetaDAO as a platform is like particularly anti-VC in any way. VCs are, there are very little restrictions on who can participate in the sales, right? Like you can fund a wallet with 50 million and shove it into every single one of these deals if you want to and get an outsized allocation. And it seems to be what people are doing. Like they're absolutely blasting these sales to get their like pro rata share. I guess maybe the point I would make is to your question about like, I don't understand what their equity plus token arrangement looks like. If we're in a situation where the status quo is basically such that tokens are kind of like a cherry on top for VCs, and that's like, when their startups that they're investing in like get acquired and they get all the value out of that equity purchase, and then like maybe the token goes to zero, but who cares because they were just sort of like selling the vesting or the past 2 years or whatever. I don't know. That's not very, I don't see that as a very positive outcome for the rest of the market. So like, in my opinion, forcing that to change is probably a net good. Like it doesn't make sense to just give like one preferential group like a little bonus Sunday topper, and then everyone else just kind of like has to eat the leftovers. That sounds kind of awful.
Yeah, and it is changing slightly, right? Like very clearly, last cycle there were these people that was like, oh, like Paradigm invested in this, therefore it must make money, or like I don't know, X invested in, therefore it must like go up, or like therefore they must do an airdrop. Versus now in crypto, we love overcorrecting so much. We'll do this talk afterwards as well, but just want to invite. Let's put this on the proper view. There we go. Hey Afif, how you doing?
Hey guys, how are you doing?
Good. We were just talking about if venture capitalists are evil or not, but now we're going to talk about Ethereal. Do you want to give a short introduction of yourself, and then we can get started?
Yeah, for sure. So yeah, thanks for having me on. I'm Afif. I'm the founder of Ethereal. Background: I spent a lot of our community members know me from my synthetics days. I spent a number of years there a while back, like starting like 5 years ago. We've been building Ethereal in the Athena ecosystem for like a little over a year now. Trying to build kind of like the best everything app around USDE, which we think is the best on-chain money.
I guess like one question that I want to start off with was, what does it look like to build on the Athena? Because when I think of Athena, I think of USDE, the stablecoin. What does it mean to build on top of that? Is that just you guys are using USDE as the quote asset? What does it look like?
Yeah, it's basically like it's building on top of, using USDE alongside other builders using USDE, right? Like you could go and just plug USDE into your app anywhere. We're sort of building like Ethereal to be like the ultimate hotspot of activity around USDE. So other builders building on USDE, and then you sort of get like shared economics from like the underlying yield from SUSD, and like but for the most part, it's building with like sound internet money.
Okay. And what are some interesting things you can do because you're building on top of USDE?
I mean, I think the most obvious is that like you kind of, when you trade on Ethereal, it's the only place where you're getting the underlying carry from your collateral, right? Like I don't think anywhere else on chain really offers that. I think there's some other second order synergies where like USDE is kind of unique as a synthetic dollar in that it has a bunch of like derivative inventory sitting behind it in the backing. And so there's also some possibility for some of those flows to move into USDE native trading venues over time that can help bootstrap, like liquidity and provide a consistent source of sticky trading flows as well.
I think that makes sense. And you mentioned that you were at Synthetics before. So Synthetics, I don't want to take up too much time with this just because I want a background, and you don't have to answer if you don't want to. But in my mind, Synthetics has moved from the original product. There's one Synthetics still going on. And then now there is Ethereal, and then there's also an Infinex arm. Can you give me is that a good basic understanding of it?
I mean, there's no relationship between Ethereal and Synthetics at all. I was just giving my background in the space. I got into the space building on-chain derivatives at Synthetics. And then after I left Synthetics, I started building Ethereal. I think Infinex and Synthetics is they have a close relationship because Kane is the founder of both. But yeah, they're not involved with either of those anymore.
Yeah, that makes sense. I guess I phrased that incorrectly, but I'm happy to understand that. In terms of, I guess, okay, so one big thing that has been going on is on-chain versus off-chain clubs. Can you describe a bit like what trade-offs you guys are doing in building out Ethereal, and like what are some architectural decisions that you guys are making that you think will make it extremely performant and very good to trade on?
Yeah, for sure. I think ultimately, I think as some of the tools for builders have evolved over the last few years, the on-chain versus off-chain binary has become much more of a spectrum. Like there's a lot more flexibility of like what you can do, and it sort of just ends up being a function of where do you want to sit in the trade-off space of what can be verified, what is explicitly required on chain, and what is just transparent and visible and like which of those do you want to assign to each, component of the product, right? So I think in Ethereal's case, everything that alters state is going through smart contracts on our Arbitrum Stack EVM chain. So like every like deposit, withdrawal, funding update, liquidation, match trade, everything that can sort of change a user's balance in the system is being explicitly enforced inside EVM smart contracts. And there's some other nice benefits of that, where you could have other smart contracts deployed alongside the core exchange smart contracts and like allow them to compose much more easily than if you go and build some kind of like bespoke system that is not, it doesn't inherit all of the network effects of the EVM and all of like the existing protocols with like many years of Lindy that you can just deploy and that they've worked for a long time and they'll continue work and they can scale very fast. So for Ethereal, that's kind of like if the goal is to like build this full USDE focused ecosystem of trading products, we want the EVM compatibility, like equivalency, compatibility right from day one. And then we have our own kind of custom sequencer that handles, that operates alongside the EVM validators, that handles all of the high performance, order matching. That was what we felt was like the right set of trade-offs to make. Over time, you can kind of move towards layering on more verifiability if users kind of really want that. I mean, transparency is easy. We can just publish everything and you can see it, but then you can also layer on more verifiability on top of it for some of the more high performance components of the system. But yeah, I think that overall that kind of summarizes some of the design choices we made.
Perfect. And why Arbitrum, I guess, is like, because there's other competitors out there, right, as well. Like, what did you guys find that was very, very useful on their side?
It just kind of offered some of the nicest trade-offs of like flexibility while still inheriting like the full EVM ecosystem with it, right? So like I think there's some nice features that like we use USDE as a gas token on Ethereal. That's a lot easier to do with Arbitrum. We have some other like custom features we're working on around like transaction ordering and how exactly gas is handled, because we do things a little bit differently on Ethereal than a normal general purpose chain. So there was just a lot of nice customizability features with Arbitrum that made a lot of sense, where you can still kind of like have your cake and eat it too.
Is there anything from like, I don't know, like a risk standpoint of building everything on top of USDE? Like I guess within lending markets, for example, this has been a topic of kind of debate of whether or not to like hard code USDE to one, for example. And now in that case, that's a little different, right? Because you're talking about like a borrow lend marketplace. And if you're going to, everything is just going to operate on USDE, maybe that's a little different. But I don't know, in any of the design decisions, does like kind of risk of USDE as the underlying become a question mark?
Yeah, I mean, we try to incorporate at many levels the notion that users are accepting that everything is we're just redenominating everything in USDE. And so I think as you layer on more products and more different collateral and risk and onboard other assets, it starts to become more of like a proper risk management, and not just like users are implicitly agreeing that USDE is the settlement asset, which I mean a lot of dexes do this with USDC, right? And I think we saw in like March 2020, was it 2023 or 2024? I don't remember. But when USDC traded at 85 cents, everybody was wondering like, does this break everything? But users are all just agreeing like one USDC is what we're trading here. And so there's a lot of similar assumptions like that. Where it gets tricky is like with lending markets and when you have like portfolio margin or anything like that, it starts to get like an order of magnitude hairier. And like we're obviously gonna implement all of the, like I think Athena has spent like the last year working with like Aave and now Binance and everybody kind of improving the risk management around USDE and like how do you price it, and like they've got great like transparency dashboards with like Chaos and all of their risk partners. And so I think like it's improving a lot, like just in terms of like just the data that's available that kind of makes its way into the market for users. I think like us as builders, we don't have any reservations about building on top of USD. I'm like fully bought in on the model. But I think it's more just around nuance of like, how do you communicate things to users and how do you make sure that you're incorporating the proper risk management inside your products.
That makes sense. I have Daniel, unless you have a follow-up, I have two things I want to ask. One is, will you be focusing on products building on top of you as well? I think perp stacks naturally lend themselves to being built on a little bit. And you mentioned this with the EVM. And the second thing is what I guess like markets will be live day one. Are you guys focused on these equity perps that everybody else seems to be focused on this past month? What is like some markets that you definitely want to be live with? Let's say end of month one, end of month two.
Yeah, so I guess I should have said it in the introduction, like we are live right now with a very limited mainnet alpha with like 100 or 200 users, mostly to just kind of technically start battle testing the system with real money. And we have like about a dozen markets. But yeah, as I said, it's very, very limited. I think, okay, I guess there was a bunch of questions in there. But like, so on the like EVM side, like we have a money market kind of already built that we will roll out when when it feels like things are starting to grow on that side, and there may be some demand. We are also working with another team that has built like a pretty novel and interesting prediction market product. And so I think ultimately, like Ethereal, we just want to like the users in our Discord are like, oh, this is going to be like a degen's paradise, right? Like you kind of have everything there. So like we want to give users like spot, perp, money market, prediction. Like these are all the killer apps of crypto, right? Initially, it was just stable coins, and then it was like, now we have spot on chain also. And then we have money markets on chain also. And then now we have prediction markets on chain and perps, right? So like these are all the things that have clear PMF. And like I think the one thing that you don't have is doing them all in one place where it's like one vertically integrated product. I think a lot of people now are like, I think it's very clear that like if you're a perps product, you need to have a prediction market strategy in your roadmap. And a lot of people are kind of just defaulting to like Polymarket or Kalshi. But we also see a lot of value in sort of collaborating and building the stack ourselves to offer like features that we think users really want that you can't get anywhere else. So like for instance, we're going to offer like parlays on prediction markets on Ethereum through our partners. So yeah, we just want, and it's all built around USDE. There's a lot of like again, like if you're creative with how you sort of are allocating the native yield that you're getting through USDE, there's a lot you could do, right? So like with a prediction market, you could do free bets with the USDE, like instead of just like distributing a few percent. It makes long tail markets much more viable, where you have like a year expiration, you're getting like 5 to 10% on your collateral while it's locked in a trade. So you can price 100 to 1 market at like 200 to 1 instead, or something like that. So yeah, we see a lot of, ultimately, like we're just like, we've always been kind of like really out there builders. Like we like to build weird shit, and we think that like users like to try who are on chain already, they like to try it, and we think it's going to be a really great product overall. On the equity perp side, like I think like again, it's another thing that like just like prediction markets, every perp stack needs to have a strategy on right now. We're not there yet because we're still kind of testing the core infrastructure more. But it's something that we've given a lot of thought around the kind of like economic design. And like, I think we have a few ideas as well about how to improve on what's already out there in a way that can kind of help those kinds of things scale a little bit more, be more capital efficient, lower risk, that sort of thing.
Yeah. I have two follow-ups. One is with prediction markets, I'm very happy you guys are considering it. I was actually chatting with somebody who said almost all of the perp stacks will have prediction markets, which to me makes sense. I'm curious, like how you think about that. You don't have to share everything because it's not live and you don't know what the end product's going to be like. But what is that implementation that you were talking about that is like very, very interesting? That it's like, are you going to be able to build it as an order book product, or how's it going to work? I guess it has to be built as an order book product.
Yeah, we could do a whole episode just on this, because like we've been working on this for like even like I feel like the kind of popularity around prediction markets has exploded in the last few months, and we've been working on this like well before that, just thinking that like this is a great product to have. And so like so I think like we've kind of given a lot of thought to like specifically around the market structure for prediction markets and what makes the most sense of how to kind of like graduate markets on different levels of liquidity. Like I think one of the reasons people are really excited about prediction markets is because it can be so many different products rolled into one unified thing, right? Like I think like it could be like if you look at Polymarket, you can go and you can bet on crypto prices, right? And so it's sort of like options or like it's got similar overlap with like perps traders who just want leveraged exposure to crypto and like prices of anything else. And then you've also got like people betting on geopolitical stuff. You could create like insurance products around specific things, and so it's all of these things jammed into one. And I think one of the things that people are not really considering enough is how you may not want the exact same market structure for all these different types of markets. And it actually makes sense to sort of have like a graduation process to move things through, like maybe you just like through mechanisms that are better for very long tail markets with no flow and very active markets like elections that you would want to have in an order book. Not everything makes sense to throw like straight inside Ethereum's order book. So we're gonna have both, where we have all these long tail markets. They don't all have, because there comes a lot of overhead comes with, like if you're building a perpstex order book, it's a different type of thing than like how Polymarket's order book works right now, where it's like pure spot. So there's a lot of overhead that comes with trying to jam all those things in there, and like it's not even the best user experience for users or liquidity providers. So it was a little bit of a tangent there, but yes, we've given a ton of thought to that. The general idea is there's a graduation process, and the most liquid markets are inside Ethereum's order book.
That makes sense.
You mentioned earlier, like, a lot of teams just thinking, let's just go ahead and integrate vanilla Polymarket call sheet straight into the app. And I guess you sort of gave a reason there about maybe differences or challenges in how the order book is designed. I guess, is that the key reason that would push you to sort of maybe build this up a little bit uniquely or from the ground up, so to speak?
I mean, I think there's a lot of reasons. Like one, like it's a lot easier to kind of curate what markets you want when you can list them yourselves on your own timeline. So that's obviously beneficial. But I think another thing is just like coordination of capital and liquidity. It's a lot easier to do on Ethereal if you have like a vault that's providing liquidity to a bunch of markets. You could do that with USDE. On Ethereum, you can kind of drive everything yourself. But then also, like, again, like I think just having the flexibility to have the product do what you want. So I think I hear all the time people are like, oh, parlays on Polymarkets would be a great product. Users would love this. I mean, I don't know. I guess like I think they have a different name outside of the US, right? Like combination bets or whatever you want to call them. But that still doesn't really exist anywhere. And I think if I'm going to give a prediction market products to on-chain perpstex traders who are arguably like some of the most risk-hungry users in the entire space, I want to give them parlays and they don't want to give them the option to do that if they want. And like I don't think you can do that if you just build with somebody else's tech stack. And so we like to build the product exactly the way we want to build it, and so like that's kind of why we do things the way we do.
Okay, so that would be you mentioned a bunch of different products that like are kind of on the radar, longer term roadmap. Like that would be your general lean is we think equity perps are cool. Let's kind of build them out exactly how we think they should fit into the product, rather than like, hey, let's just go directly integrate this top name that's doing it today.
Yeah, exactly. And I mean, it's not even really long term. Like equity perps we could do today. Prediction markets we're testing on mainnet right now. The money market is already built. Like we've been doing all of this in parallel like over the last year. And we're now we just rolled out the first thing, which is like perps trading on mainnet, very tight alpha. But I think the pace at which we're going to expand all of these offerings to users is going to be very quick over the next few months.
I have one thing about equity perps I want to ask, and I know I'm kind of putting you on the spot, but like it's just something I've been thinking a lot about is how are you going to do weekend and holidays on equity perps, like with oracles? I just asked this to Thanos, who was on before you, but like, is this something you guys have spent thinking about?
I mean, I think ultimately, like you kind of have to pricing it is not the hard part. It's how you, in my view, it's how you manage risk around it. I think pricing, like what people are doing is like the contract, when there's no external market, it becomes self-referential, right? Like you kind of just use the market's own, but then it becomes a question of like, if you're going to do that, how do you process what the market is actually trading at and turn that into a mark price, right? I think you see like with high perps on Hyperliquid a lot, or generally pre-launch markets, they're self-referential, but then it becomes sort of just like a battle of which side of the market has more money to throw at, manipulating the price and liquidate the other side. So I think that's the obvious. If you want to do 24/7 until you have like 24/7 spot markets, it has to be something like that. It just becomes a question of more of like risk management and how do you mark the contract more than like what are you going to use as the data source.
Okay.
And that's another thing I could probably do an entire episode on talking about.
Very good. It sounds like we're gonna have to have you on for 2 more episodes. One where we discuss prediction market, Chris Jackson.
Yeah, I'd love to come back on when we launch the prediction market product and talk about it because it's really cool.
I also, you brought up Hyperliquid. There's also Lighter is very, very popular. I mean, there's a lot of there's a lot of perp sexes out there that are very, very popular now. What's the game plan? You go live, you have USDE collateral. What's the like push that gets Ethereal more users than everybody else? I know you guys had a very successful pre-deposit campaign as well, right?
Yeah, I mean, I think the pre-deposit campaign kind of showed that's like another, going back to the beginning of the call, when you say like, what's the value of building in the Athena ecosystem? Like, is it just using USDE? I do think like the capital coordination element of it is like really, really powerful. Like there is no like USDC ecosystem. There is no USDT ecosystem as much, where you kind of have this network of like liquidity providers and power users, a lot of them who also trade a lot. Like we've had inbounds from users who are like, like top 10 in Athena points earning, USDE whales, and they're like, I just want to move all my perps trading to Ethereal. When can I do that? Like even a few extra % on my margin will greatly improve like the risk reward of some of the ARBs I'm running right now, because I just don't get that anywhere else. So I think like there's a lot of these intangibles of the USDE Athena ecosystem that are very underappreciated, that, as I said, like and as you said, for the pre-deposit, kind of just showed like the capital coordination is very, very strong. So like when we roll out the community liquidity provider vault, we think that we have a fast track to kind of like scaling the TVL in that and having a really strong, like immediately on the same level as like Lighter or Hyperliquid in terms of like how much liquidity is there actually that is like backstopping the thing. And then just like the network of users who already have tons of USDE who would want to move it to a DEX that is settling in USDE. That doesn't exist anywhere else. Like you can use your USDE as portfolio margin collateral on Bybit or Binance, but it's haircut. If you have unrealized P&L, you've got to pay interest on it. You don't have the same capital efficiency. You take more risks if they're not, like what happened on Binance, if they're not marking it correctly. It's a very different value proposition from if you just have a DEX that is everything is settled and denominated in USDE. So I think like that's the reason why we're building this on USDE and in the Athena ecosystem, because we think it kind of can help turbocharge the growth and the go-to-market in a lot of ways.
I think that makes sense. One more question I had, Danny, before you ask. With Athena, how close are you guys working? How much support do they give you? Because to me, it seems like this is one of their like 2 new growth strategies. One being like white labeled stablecoins, the other one being Ethereal. Are you guys getting a lot of help? Are you very closely in contact with them? What does the relationship look like?
Yeah, we work really closely with the Athena team. Like they've been like day one product and design partners on this. And yeah, they give us a lot of input. They provide us, a lot of give us a lot of help with like connections in their network and that sort of thing. And like I think probably like the ecosystem is getting big for Athena, right? And so I'm sure they support all of their builders. We were one of the first to actually say like we're just going to build exclusively in the Athena ecosystem, and so like we obviously have a close relationship because of that. But yeah, I mean, I think the Athena team and just the Athena community in general is it's a great place to build.
Very good.
Yeah, maybe just as a final question here for me is, what's kind of the short-term expectations users should have? I know that I think what mainnet alpha, I think you're calling it, is live. So like maybe as a prospective user, what, getting on there and like what should I be looking forward to here over the next couple of months?
Yeah, I mean, I'd say like the hardest part for us has been trying to just sit on our hands. And I think you have kind of the opposite problem. Normally, you build and then you want to try to find as many users as possible to use it. And like we've kind of like, since we've launched, it's been the inverse where it's really hard to just tell people like, please don't, like, yes, just wait like a few more weeks. Like we just want to test the architecture a little bit more. It would be really bad if like we had this huge influx of users and weren't prepared to handle the load and that sort of thing. So it's been great having tons of inbound users. I think we're kind of at the point now where like I think we're probably going to be like doubling every week or two or something like that. Like I think just today, like with the 100 or 200 or so users we had, we made a new all-time high in volume, which is nice. And like so everything is performing flawlessly, right? So I think from a prospective user, hop in the Discord. A lot of the time we just give people access if they seem like they really want to try it. Or obviously there's the wait list. But like, yeah, I think I would say the access is going to expand a lot in the next few weeks. And so if anybody is interested, like just come and hop in the Discord, jump on the wait list. You'll get access very soon.
Very good. I have one last question, and then we're gonna let you go, Hafif. But actually, two questions. One is, so you guys have been building this for some time now. What is something that you would have done differently over the past like 7 months that you're kind of like, it doesn't have to be a bad thing, but something that you realize now, like, oh, I would have rather have done it this way. And the second question will be, where do you want people to go? Which I assume is the Discord, but if there's any other resources that you want to point people to, please let them know.
I'll take the second one first, as the most recent. Discord, yes. I mean, another thing you can do is deposits are open even if you don't have trading. So if you want to deposit that into the app, you'll probably be able to trade faster. So if you want to, and you get yield and points on your deposit in the meantime. So yeah, I think like either just deposit into the app and join the waitlist, or come to Discord if you want to get more involved. Those would be my main two CTAs. Things I wish I'd done differently. That's a really good question, because so far, like, I don't know if we've just gotten to the point where we built the thing exactly as we want it. Haven't really had much time for regrets yet. Because like it's like, okay, it's done. This is exactly what we wanted to build. And like I don't know if there's necessarily anything I'd say at this point, like, oh, I wish we had really done this differently. I would say, yeah, I mean, I guess I don't have anything for you at the moment, unfortunately.
No worries at all. We will just have to have you on when you guys go live with the prediction markets, and then I will ask you the question, and then you can tell me if there's anything you regret or not.
You'll be the first to know.
Very good. Okay. Aviv, thank you so much for coming on. This was fantastic. Enjoy your Friday and your weekend.
Yeah, thanks for having me on, guys. And yeah, you too.
Thanks for coming on, Aviv. Great stuff.
We have a free. That was good. That was good. Furial is one I'm looking forward to. One of the smarter people that I know within crypto, like the type of person that doesn't tweet a lot but is like very active everywhere else, had mentioned Ethereal maybe like 3-4 months ago with their pre-deposit. So it's something that I'm looking forward to. Also, Westy.
Westy was very excited about Ethereal.
Right. Westy is very excited. And the thing with Westy is that if he is excited and it does well, he will not let you forget about it. But if he's excited and it doesn't do well, he will just never bring it up as well. And to me, Ethereal feels like the kind of one that will do well, and he will not let me forget about it. So I'm very excited to see what they're building. See how they're doing. It is interesting to see how much they're thinking about the future right now. Like prediction markets in perps is something that no other has attempted yet. We don't have any announcements about it. Like we have and Mr. Velvet Milkman will come on and maybe he'll have some takes on this, but perps and prediction markets is something that hasn't been explored, but like is like explored in the research circles and not in the product circles yet. So it is interesting to see that they're already thinking about it. It's a cool thing to hear about.
Yeah, I think this is something that probably we've been expecting. Like I don't know. I think you look around at some of the sort of platforms that exist, or even terminal products, and it's kind of like, when are you just going to integrate more of these things, right? Let's say you're already doing, like Axiom, for example, is doing memes and has hyperliquid perps. Like, when are they going to integrate a prediction market kind of terminal piece of that as well? I agree. I think it makes a lot of sense. I think he made a lot of great points about like kind of an inevitability here in terms of like the platform approach of just everybody's going to want all these marketplaces all in one product. So racing to that seems to make sense.
Yeah.
Before we have the milkman on, I do want to give one last shout out to our sponsor for today's stream, Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users that bridge to Katana can earn boosted yield from cat incentive campaigns, added vault bridge yield, and other chain revenue. Follow the link in today's show notes to get started. Thank you so much to Katana, our sponsor for today's stream. Let's get back to it. We're waiting on the milkman to join us.
Fucking velvet milkman, and he just won't come on. He just messaged me saying, "How do I get on?" Which doesn't inspire a lot of confidence. I saw that he just had a podcast released yesterday, and he was also on Unchained like 2 months ago. I mean, he's a very public figure. He clearly does a lot of talk. So I don't know if he's just egging us on.
What is yeah, I didn't know the milkman was going around on a podcast tour. That's
Milkman's on a podcast tour. Figment Capital needs to let him speak more and more, because
let him speak freely.
If it's anything like slots, there we go.
Please speak freely.
Hello, Jim.
Hey, what's going on? How's it going?
Good. How are you doing?
Welcome on.
Welcome. We're already live. Just FYI, just in case.
Okay.
But, Jim, do you want to give a short intro, and then we can dive in, and I can bug you with some questions?
Yeah, I don't even know what what are we talking about today?
It's gonna be fun.
Okay, cool, awesome. Yeah, so I'm Jim. I'm not a developer. I'm actually the managing partner at Figment Capital. We're an early stage venture fund. We're focused on like DeFi infrastructure. Been around since 2021. We're a pretty small team. There's Rob in the background. Dougie's over there. 3 guys in a room trying to make things happen. Other than that, I'm also an active participant in the 0xResearch Telegram chat. I don't know whether I'm on the left curve, the right curve, or the middle of the curve. I presumably on the downslope of the left, if I had to guess. But there's like a lot of smart people in there, so I don't take it personally.
No, I'm happy you're in there as well. I appreciate your takes and your slot sentence. Jim, I purposefully didn't send you the questions for today because I kind of want to take some risks today. Number one is
let's take some risks.
Great, awesome. Glad I'm there. It's amazing.
First of all, I'm aware that as a fund you can't chat about everything, so you can just tell me I can't chat about that, and it's completely fine. It's happened before. I guess just to start us off, I read your hyperliquid HIP-free, not HIP-free. One of the hyperliquid articles you wrote for Bedlam Research. I'm curious. One of my takes was, and I talked about this with Crane as well, is that a lot of intellectual capital is moving towards this perp space and this hyperliquid space. Do you think this is a take? Do you think this is a correct take, or do you think we're still not there yet?
You mean just because of all the HIP-3 kind of launches and stuff like that?
Yeah, I feel like a lot more people are spending time thinking about Oracle designed for equity perps, or how can you deploy perpetuals prediction perps on perp dexes on hyperliquid, etc.
Yeah,
Does that make sense?
I've talked to Crane about this as well, as early as this morning when I told him I was going on. So I think like the article that we wrote was like, man, I don't even know when it was. It was probably like 4 months ago or more, right? And at the time, like I read, I mean, the spec or whatever you want to call it in like the Git book for what HIP3 was going to be was pretty small. It was like 2 paragraphs or something like that, right? And I read it and like I was like, oh, this is interesting. Like this is really cool. And I asked a few of my friends, like I was like, hey, have you read this? Like because like, there were a bunch of takes on Twitter and there were a bunch of Twitter articles, and it was like, no offense to those people, but like it was very surface level. It's like this is going to change finance and crypto forever, and like nobody really looked at it, and like most people had not read the paragraphs, like literally nobody. I would ask a bunch of people. No offense, Crane included, right? And then Crane read it and was like, "Oh, this is interesting." And so the reason we wrote the article, honestly, was because, and like we wrote it because like we didn't think that there was anything good written about HIP3 yet, and then nobody really actually like kind of looked into it a little bit deeper and said like, "What is this?" And like, how can this be like? What is interesting about what is actually interesting about it, and like also where does this go from here? And like what do we think could potentially be interesting about like projects that launch HIP3 markets? And so it got a lot of views, it got a lot of reads, it got a lot of like looks and like some attention, and that's uncommon for things I write. So like that was nice, and we actually became really bullish like as a team. Like so we don't like Hyperliquid didn't take any venture capital, right? We're not investors in Hyperliquid. It's like, but like I hold hype myself. I'm a very terrible perps trader, as many people probably are this morning. And I think what we started to think about was like we had like an idea of what Hyperliquid's like EVM ecosystem should look like, or could look like, and it's a lot different than I think other EVM ecosystems that are like general purpose. And so the products that we think should exist on Hyperliquid or could exist on Hyperliquid are slightly different and nuanced than like the products that could like list and launch on like a general purpose smart contract like L1 or L2 on day one. And they should essentially like, I'll try to be really quick with this, but like you have this like flagship product in the middle of this L1, right? And generally speaking, there isn't a flagship product in the middle of an L1. And so when L1's like launch, what do you have? You have like AMM, lending protocol, LST, maybe an NFT marketplace. I don't still today, right? I don't know, but those are like the foundational, like kind of like building blocks of like building an economy, right? Like stable coins. And here we have this like flagship product, like the kind of like the Burj Khalifa, just like in the middle of the city. And it's like, hey, like rather than try to build, don't really make sense or benefit at all from this like huge product that's right in the middle. Like, why don't you build like more of a pyramid? Like, sure, eventually AMMs and lending protocols and all these things, like they should also exist, but like there's actually a bunch of products that could be built alongside the flagship product that like start to like kind of benefit from and like contribute to like more adoption of perps. And so we kind of were like trying to push people to think a little bit more outside the box and like building another lending protocol and building another NFT marketplace, like build something where you have like, billions of dollars of volume that like are complementary to the flagship product. And like, that's actually more interesting.
So in my mind, this is like a prime brokerage. I honestly like, now you're making me feel dumb, but like 6 months ago when Hyper EVM launched, I was like, you don't really need anything on the Hyper EVM, but lending markets, just because I think people are just going to want to like borrow on something and then bring it onto the chain. But you think that's not a good take? You think it's not?
Well, like people want to like, I mean, I don't know if you've been on the lending markets, but it's like really tricky, right? Like the yield's really high. Like the interest rates are really high. Like sure, people want to borrow as their hype to gamble more, right? On perps. And like, then I don't know how they're paying back their loans, but like even USDC was like, there was no bridge between Hypercore and like Hyper EVM. So like, if you wanted to trade perps on Hyperliquid, on Hypercore, right? You'd go to Hype, you convert your Hype over to Hyper EVM, you deposit it into, like you're gonna probably do a LST, right? So like you deposit it into like Hyperlend or something like that. You borrow Hype, you deposit that into Felix, then you borrow USDT, then you transfer USDT over to Hypercore, then you swap it into USDC, and congratulations, you can now trade perps again. Like, oh my God, like what year are we in? Like, it's crazy. It's like, that's so many clicks, right? And part of it's due to the fact that like USDC just like wasn't native on Hyper EVM initially, because like you'd be like, hey, how do I transfer my my USDC over to Hyper EVM? And like there's like, you don't. You transfer Hype over. And so like there's just like all of these like headaches that exist. And so I do think lending is like so yes, people do want to borrow against their Hype, right? But like products like risk finance is like one of those types of products, which is like kind of interesting. It's like it's options, put options on some of the spot assets. Obviously like Unit is building a bunch of different things, but like for one point in time, at least, it looked like they were going to be like the spot markets for Hypercore. Now they're kind of also building HIP3 markets up. I haven't seen anything. Meaning to ask, like, I haven't seen anything about Mon, like spot. Like, have they already minted that ticket?
I saw they minted it. I think they either minted Mon or Mega, but not both of them, is what I remember.
Yeah.
But
and then there's a couple other products we think are also interesting. So there's this one called like Bounce, right? Like we invested in them, so I'll just start with that. But like they're building like leverage tokens that like rebalance. So like there's like no liquidation. So like if you're like directionally been correct on every single move, but you keep getting like blown out, like on like a quick like 10 or 5% move or 2%, 1% move, depending on how much leverage you're taking on. Like this is a way to like, you can stay in that position and it just like rebalances to the upside or the downside to give you like either like protection. We think that's like a good product. We think that should exist. Like Pair Protocol is building like pair trading for like really simple like design for pair trading on Hyperliquid. Like that seems like a good product. Like that should exist. And I think there's just going to be a few more of these products that like can kind of like leverage all the liquidity and all the activity on Hypercore, and maybe can actually provide like better retail solutions that it can be very successful products and generate a lot of revenue and be like a little different than just like your next AMM or something like that.
Yeah, and you make a lot more money on it as well on Hyperliquid because of the way that they set up builder code. So it's like it's not. Like if I'm Pair, now I know Pair is an existing product that has like, it's been out for some time, but they're going through some form of change. I don't know if they have yet. I assume they're using builder codes, and that's like, you can immediately start monetizing it if you can get the users, versus I feel like to build a product out like that, like just building out a pair trading product, it would be impossible almost, like without a builder codes type of thing where you can make actual money on fees, because else it would just take you months and maybe even years to get the.
Yeah. And so Bounce is going to be another example of this, right? Like they're going to be able to use builder codes. They have the team actually came from like they built the same product previously on Synthetics when Synthetics had an L1 perps exchange, and they were acquired back then. And then now they're building. They like left and like they're building this product, and like I'm excited to use like 5x leverage tokens, which like if you look, when we're doing our diligence, we looked at like the FTX estate and we looked at like all the assets that were listed on the FTX estate. And the one thing that like because when HIP3 first came out, we were like super excited about it, and this is probably a different story, but like we were like, okay, what isn't being traded right now that could be a market? And like what isn't being traded that's like really interesting. And we talked to like market makers. Turns out market makers don't have an opinion on like what assets like are interesting. They just want organic flow of like $25 to $50 million or $100 million, and they'll show up for free, and you don't have to pay them. But like they had no opinions, and then we started thinking more and more. Like this is like back during like before ETHCC, we were having these conversations, and like Forex. Equities, it felt like it pretty early on that like Unit was going to try to own the equities perps market. So that's like sort of not an option. Like there's nothing really to back there. And we just like, there aren't that maybe we're wrong, but like the amount of like volume that you're looking at, it's like pretty hard. Like when you look at actually Hyperliquid's volume and you look at the assets that are trading, like on just like the regular perps, like there's like less than 10 assets that have over $100 million of daily volume. Like,
Yeah.
and so you're like, okay, so are people really going to trade like silver perps? People really going to trade like pre-IPO stock perps in size where like the company is actually going to be generating like real revenue? Like, I mean, we wound up like kind of walking away and going like after that article, after all the research, we kind of were like, oh, like maybe it's not as big of an opportunity today as one thinks. And like, I think Unit's done a really good job. I think like the equity perps have actually done quite well.
Surprisingly well, almost.
So I would say like for me as an individual, like surprisingly well. Today's a bad day to like look at them, but like yesterday, I think there was like over $100 million in like. Oh no, today's a good day to look at it. Like I mean, the XYZ 100 has like over $100 million of daily volume. You know, it's all like $140 million. Like Nvidia has over 50. Like that's really good. Like 140 is like that puts it over like Farcoin right now and puts it in the top like 7. I think if I'm looking at this correct, like really quickly, like 7 or 8.
Yeah.
Perps market's trading on Hyperliquid right now. That's impressive. That's awesome.
Yeah, perp sexes are super top heavy. I guess like perpetuals volumes are like it's mostly BTC ETH. Even doesn't really. I'm kind of sad about your take, but I also I guess I kind of agree is that like pre-IPO markets probably won't. It's a very cool idea technically, like, but I guess like you don't care about the cool idea because you're investing in a business and the business has to make some form of money.
I mean, Noah would tell you yes. Like I think everybody falls in love with ideas a lot of time, and like we wind up consistently having to like check ourselves, and like we fall. Like I think everybody falls for it a little bit, right? Like the dream. I guess the question is like how is like the pre-IPO like markets like designed? Like who are the market makers here? Like do they own inventory of like the underlying where they can actually like hedge? Like it's really tough for a perps market or even like a spot asset to trade on a single, like if a spot asset trades on like a single exchange, like market makers are supposed to be, delta neutral. And like, how are you delta neutral if there's only like one market for something? It's very hard. And so like, I think I'm uninformed on like, equity stuff to begin with. So like consider me retail in this example, right? In this conversation, when we start talking about like this type of stuff, but like hyperp, and they're using hyperps, right? And I think like there's been a lot of problems with like the asset is the asset's price is the Oracle price. And with volume this like low, I've been trying to look into. I know there's some protections on weekends and like on like some of the equity perps, and I actually haven't read it. I've been meaning to read it because I had a feeling we'd be talking about this, and I haven't read it. But like there's not a lot to read about it. Also, it's like kind of hard to find the information, and so there is like some protection over the weekends on like liquidations and things like that. But I don't know, like what is really the price of like Stripe's like shares, and why are we gambling and like betting with leverage on something that like doesn't have a price that like a tradable price? Like who's taking the other side of the bet? And like you worry about liquidity. What I worry about is like liquidations, right? And like the actual like the market itself not being like a proper reflection of like what the value of something like presumably if it was trading today.
Yeah, I'm glad you brought this up because the previous two guests I had to bring it up, so you brought this up, so I don't have to bring it up. But I completely agree with you. And equity perps are public equity perps are the exact same thing. In the weekend, like yes, it's better than pre-IPOs, because there's actually like some form of a market you can attach to, or like multiple markets you can attach to or anchor to. But it's also very difficult to do, and I don't know how they're gonna do it. But like you said, they have some weekend stuff. Some of them are just charging like 1% fee on the weekend for any trade.
Yeah.
I don't
Okay.
know how,
That's
like,
I guess that's something, right? Like I guess you should close your positions over the weekends. Like I mean, it was cool that the Nvidia, right? Like so, it's like also there's some cool aspects of this, right? Like the fact that you could take a bet on like that Nvidia was going to beat earnings, and you could be long, and you could see that market like post close, and you could be long, right?
Yeah.
And sure, the price did rip up like on like the news, and you could make money on that. I also saw a lot of people getting liquidated on the long, like like a 14 minutes later, you know. But it's nice. It's cool to have this like ability to take that type of bet, and to make that type of like investment or wager or trade, take that trade. But beyond those types of events, like there's a lot of, I think, risk involved, and like I think like the liquidations are concerning. Like the risk of liquidation is like people are getting liquidated enough.
Yeah. Yeah. Danny, I realize I'm kind of dominating, so, and I saw you unmute twice and I had to mute again, so please.
We're well past some of the questions I had. Maybe on the pre-IPO thing though, Jim, I think you have a good point there. Like, it's interesting to skip straight to a perps product for something that doesn't have a spot market. To your point, like, I don't know, I would just be so concerned about being liquidated by basically nothing, like people just pushing the price up or down, and like nothing material has happened. The price, maybe the underlying like price of the thing in private markets hasn't changed at all. Like, you know, no fundamentals there. So it's like, I don't know, you're just at risk of like waiting around for 3 years long, paying funding to hope you don't get wicked by somebody trying to close you out of that position before.
Like techno revenant, right? Or
Yeah.
like someone like, I mean, what is the difference between trading like, yeah, I'll just keep using, I mean, Stripe is not a good example because it's not one of them, but like maybe it's a good example because it's not one of the ones that's like listed, right? But like, what's the difference between trading Stripe pre-IPO perps and like jelly perps? You know what I mean? Like, what are we doing here? Like,
That's such a funny comparison.
well, because the markets are as manipulatable, if not more.
Yeah.
Right? Like, if you had $1 million right now and you threw it into the which one is it? SpaceX perp. If you threw it into like the SpaceX perp, or even the OpenAI perp, like what's happening, right? The open interest is like $300,000.
Yeah,
I like it's gonna be $1 million after that, but it'll be your $1 million, right? Like essentially. And I could be wrong here. If I'm wrong, chat, like don't at me. But like, I don't think I am. I think like.
I think that the interesting thing here is like, it is something of interest. Like we've seen Vlad at Robinhood talk about they want to do pre-IPO stock tokens, and I mean, there's plenty of platforms who've like kind of tried to do this to some extent. Like Republic has some of their like, you know, our SpaceX and our OpenAI tokens, and it's kind of a similar thing. And I think they, you know, they're not liquid, and you can only invest so much, and it's pretty small market relative to what's going on there. So do you expect that that's something like kind of the regulatory landscape has been changing? Do you think that that is something that might change in the future, and like maybe spot markets do pop up, and then at that point it's like, okay, perps, like let's throw the perps on top? Or
I'm not going to. We're a team of 3, and so the regulatory like aspect of like pre-IPO equities trading is like not something I spend my time on, to be perfectly honest with you. But like, could I see it? Like, yeah, I think so, right? I think it's like, it's already sort of happening. Like, there's like OTC. I don't know if you guys are in any of these like Telegram OTC like notification chats and stuff like that, but like, there are people buying Kraken shares like maybe even earlier this year at like $2 billion or $3 billion, right? So like these markets exist, and like bringing it to Robinhood or something like that, I think is interesting. I think price discovery it's valuable. It's valuable for employees. It's valuable for people who want to, for shareholders. It's valuable for retail to get like earlier access to these markets if they want exposure. So like, and I guess like my answer would be like, yeah, I think that's probably the way it works, is that like once those markets start to exist, then you can have perps and options, I guess, like maybe, but like, but that makes more sense to me. They're also just like rife for like insider trading, like, which is like another thing that seems obvious. Like if you knew the results of like if like the president was going to announce something about like the Bitcoin reserve, or if you knew what the results of the NVIDIA, like, you know, if you work at like an audit firm or whatever, like, I don't know, like you could put on a perp and on chain that like no one's really going to know you did it, versus like trying to buy the shares, like, which people would absolutely know right away that you did it. So there's like, yeah, I don't know.
We've once again come to the conclusion that crypto is very, very useful for people who are trying to insider trade, which I'm very happy with. We've decided. Jim, I realize we've talked a lot about perps, but I never got to ask you my like quintessential VC question, which is, what are you guys most excited about apart from perps in this case? Like, what are you looking forward to? Whatever you, but this is like, I think the VC's dream, which is you can shill whatever you want for the next 5 minutes and no one's going to be upset.
Yeah. I mean, I think, like going forward, or like what's in our portfolio, or
going forward, like where
are you looking right now? What are you looking for?
Yeah. So I'll give you like one example of something we're looking into. We haven't invested in either of the two major prediction markets, Kalshi or Polymarket. Congratulations to both teams on massive valuations and raises. But we have been using them and trying them out a little bit and testing them. And man, the liquidity is bad. Like Dougie's specifically is like in a prediction market right now where he has like a $500 position. And like, if you wanted to put $3,000 into like this position, which has like generally good volume, like he'd take on slippage of like, 25% or something like that. And he wanted to close the position because he was up, and he would have taken like 40 or 80% like slippage, right? So he would have lost money. He was up 80%. He would have lost 10% or something silly like that if he sold it. So like clearly liquidity is a problem on these exchanges. And so one of the things we've been looking into is like whether there's some solution. Like Kalshi is off chain, at least for now, and like they make their own book, and so it's a little bit different. But like, but for like Polymarket, which is on chain, like my understanding is that they don't quite, like, market makers get paid like to take the opposite side of like informed flow, which is like a pretty bad deal for the market makers. And or for Polymarket's business, because they just wind up paying a lot of money. So like we've been trying to figure out if there's like ways, especially for the on-chain, like if there's like ways to solutions for market makers to be more profitable, and if there's projects that are like able to like enhance or to like provide more liquidity and inject more liquidity into the markets without being like super exposed to like directional moves in the market. And we think we found a team who's like maybe building in that direction. That's pretty exciting. So we've been spending a lot of time on that. I've also, so that's like one thing that we've spent like probably the last like month or so on. Beyond that, I mean, we led the pre-seed in a company called Euphoria. And so people are kind of familiar with that. We're really excited about the product. It's actually really interesting in times of volatility. Like I've got the beta version of it. I think people have mostly seen the alpha early on, and now they're seeing the beta version. And that team is like just shipping something really, really complex that looks really, really simple and like left curve. And like that's so hard to do, I think. And very few people have actually built a good UX for anything in crypto, I would argue, or I would make the point. And so I'm really excited to see where Euphoria goes and like whether people and how people are going to use it and when they're going to use it. Like I'm already kind of like training my own mental model of like when I should be opening Euphoria. Probably when like people are really sad, it's like a good time to open Euphoria and like try to trade on the volatility, the little alpha there. And the other thing we've been looking at a little bit more is like, and there's been a bunch of articles like this week on it. But like we're looking at options, and it feels like now is a good time maybe for options to exist in crypto, both so that you could buy puts and like maybe hedge like some of like your individual personal like positions. But it just feels like a good time, and like maybe the tech is like kind of there, and institutions are sort of here a little bit more than they were in the past, and like it's like one of those things where you go, oh, like what was trying to be built in 2018 and 2019 and just like never made it and like didn't have like product market fit, and like I think options might be close to being ready. We might as an industry be close to getting ready for options, which is kind of cool, and we're looking into that a lot, honestly.
Do you think that like we're at a point now where IBIT, Ethe, like some of these ETFs are large enough and they have like openly publicly traded options on those products themselves? Like, are we at a point now where options on chain just make sense because you can kind of look to those markets as kind of the existing kind of pricing of them, and previously we just you just didn't really have that and there wasn't enough interest otherwise?
Yeah, I mean, it's still going to come down to what the premiums are, right? I think, and like everything that whenever I've ever looked on chain for like an options market or exchange, like the buy that's just like crazy, right? And then like if you talk to some of these teams that like we've talked to a lot of teams about it, right? We've like really kind of tried to do quite a bit of diligence, and so we talk to market makers about them, and they're like, oh, we offer options, we offer like options. Like, oh, like, really? Like, what do they look like? And so we've just to like get a sense of like what the pricing looks like, and it doesn't look like anything that it's like on chain. Like on chain is like way more expensive, and then you have, like you said, these ETFs, right, where there's options on price on the ETFs. And so my guess is that like maybe the infrastructure is like maybe the chains are fast enough now. Maybe that's part of it. Maybe they're cheap enough now, and maybe there's a way to use perps as like a hedge where like these market makers can actually just kind of go and just use the perp. And like the question is like whether there's like enough sophisticated users or whether like perps are a better product. Dougie would tell you that like perps are a retail product, like fundamentally a retail product. They're not like an institutional product. And I think I tend to agree with him that it's like much easier for the retail user to like say, oh, I'm going to make 3x if this goes up, 100%. It's harder for them to like kind of grok the options, but I think institutional players like sophisticated. I don't know. Maybe it's not a good time for options. Maybe I'm talking myself out of it right now. But like I think there's a lot of people who got blown up on 1010 and would like some sort of like liquidation protection. And like one way you can have liquidation protection is entering into an option, call option or like a put option, because like it expires when it expires, versus sorry, it moved on you and you're blown out now. So like you were correct on like the longer, you thought in 3 months like it was going to be here and like it actually got to that price, but like unfortunately the road to get there wasn't like a straight line. It was like a pretty volatile like trip to that ultimate number.
I agree with Dougie in the perps or retail thing. Now I really like I fell down a big option because I thought they were very, very cool. Last like in the bear market 22, and back then everybody just wanted AMMs, so like or like 21, everybody like we didn't think order books were possible, so we kept building out like AMM style options. Now I think we have the order books and everyone's super comfortable admitting that AMMs are not great for trading a lot of assets. But from what I understand, institutions in crypto have access to options already, and like that's what you're saying as well. Like, and not just institutions, but if you're a protocol team member, if you're a founder, like anybody who is able to go and talk to a market maker on a regular basis or like on a one-off is able to get these options. And if institutional flow wants options, I feel like they would want it hidden away by a market maker as opposed to like putting them on chain. Is my thing. I like, for context, I don't understand options very well. This is like the first time I've thought about options in a really long time. But like just off of that, I would really like options as well because sometimes I want to just hedge. And I don't think perps are like, it just doesn't work. It's not a viable way to hedge. It's always, if you take on a perps trade, it always feels like a directional bet as opposed to like, oh, I'm just trying to reduce exposure. It doesn't make sense.
Yeah, like so I think, and so interestingly enough, like, you know, I don't think I'm giving away any like secret sauce here, but like when you look at Euphoria, right? Very simple product. Like when you look at it, it's squares and you tap on the square. These are options. This is options, right? They're very short-term duration options that are like both long and like you have like some like upside and some downside like price that you're like targeting. And so the question like that we've like kind of pushed Euphoria for like quietly has been like, okay, cool. Like you guys have like, that means that like on the back end, there's like an options exchange, you know, and like that's really cool. And like, can you do like a pro tail version of this? Like, right? Like, so you got the left curve, can you get the right curve? Or can you offer like other sort of like scenarios where like people can price like what because like the crazy thing about it is like you're just showing them the multiple on Euphoria, right? And like there's like a couple of conversations we've had around like what maybe other versions or other opportunities exist, like using that same like kind of front end or maybe a slightly different front end and like making it retail friendly and kind of being like, yeah, I want to put some sort of downside protection. I want some sort of upside protection here. If I'm short, I guess. And so it's like a matter of just like, how do you make it easy enough for people to grok that like they feel like that they can like learn, like options are hard to learn, right? Like, there's a lot that goes into them and it's hard to learn on like the most liquid markets, like in traditional finance and like in crypto, like it barely makes any sense for anything that's been like available to the public. I think it's a little easier when it's like on the private side. We haven't bought any options or sold any options or anything like that, just to be clear. It's like not in our mandate. We don't hedge or anything like that. Like that's just it's not what we do. But it's like, but we've been asking for like prices to just understand like what it looks like and like what the price of these things look like. And like for the private investors, because like not everybody has exposure to that. And I think a lot of people would have liked some optionality over the last couple of months. Like my guess is like people are like, oh, that would have been nice.
Yeah. There's a lot of vault I know we're going over time, Danny, so I apologize, but there's a lot of vault
to do. It's all good.
There's a lot of vault products that got built out. Like I think a lot of people tried to simplify it to some extent, and it just never worked out. I would like for it to work out, but I think the Euphoria approach is cool because you're kind of taking this thing that is I think crypto retail doesn't like options. Like clearly it likes perps. Yeah. And you're trying to make it something that is like, okay, well, what if we repackaged it into this format? And then it's like very dynamic. I've only seen the alpha version on Twitter like 3 times. So I'm going off the boxes.
Yeah, I chased you down. At the conference. And
yes, it is cool. Yeah, I don't know how it's going. I don't want to speak out of my ass about options.
It's just like sort of like you can almost set it and forget it, right? I mean, so if we talk a little bit more about perps, right? Like let's like compare it to perps a little bit. The thing about perps is like you are glued to your screen when you open a perp, right? Like nobody buys like a 5x long or short perp, like, and is like, okay, let me go to the movies and let me go out to dinner with my partner and like let me go away for the weekend. Like that's not the experience. And then like let me turn off my phone. You know, like that's not the experience that anyone has. Like people are glued to their phones. They're like, oh my God, like it's just this like set this like sense of dread that like the worst is right around the corner. And like one of the cool things about Euphoria is like actually the time, like people are like, hey, these are like short duration. It's not very, but like the great thing about it, and I think like what we could do is we can maybe extrapolate this to like options just in general, is like you open up your phone, you play it. When you're done, you're done. And like, okay, that was good. Like I don't have to work. I can now put my phone down and I can go have dinner, right? And go out to dinner and have a nice time. And like, I think if we just kind of like extrapolate that to options in general, it's like, yeah, I'm like hedged here. If the price goes down, I'm gonna like buy here. I'm like, I guess I'm a forced buyer maybe at this price, or I'm like a forced seller at this price. But like that's okay. That's what I want. And I think it's just I think we'll see more experimentation around that, like over the like if anyone's building an options platform, like particularly if you're like using perps on the back end on Hyperliquid, like let us know. Please reach out. But just in general, I think like we're interested to like learn more and see what people are experimenting with right now.
Yeah, maybe I'll just add to what you're saying, because I think I agree with a lot of it. Is like the top heaviness that we discussed with perps, like the same exists for options even in the equities world. It's like if you go to a smaller stock way out on the expiration date, it's like, yeah, there's not gonna be a lot of volume there. Same goes like if you wanted to have an option on Jelly Jelly, like that no one's gonna be trading that, but I'm sure the BTC book could be quite full. So I think it's just one of those things where it's like this is something that, I mean, the industry has talked about a lot, and it's like, yeah, you know, options for like probably BTC, ETH, like some of these core majors could be pretty meaningful. And I don't know, maybe there's just a disconnect when these products like try to position it or sell it to retail. It's like, where's the option for, next June on Bonk? Like I want to have a bunch of liquidity on that. It's like it might just be tough to like fill that particular spot in the market, but there's probably plenty of capital that, like you're saying, would be interested enough to, hedge or get, asymmetric upside maybe on like BTC or something based on their view of the next 12, 18 months or next 3 months or something along those lines, and then not get liquidated.
Yeah, I mean, we have to ask ourselves, like, what are the market makers doing that are offering these options, like on the other side, right, to the private side? And like, my guess is that they're in perps, right? Like, my guess is they're in the perps, like they're hedging it in perps and charging you like a flat fee, and it's like up to them to like figure out the math and the calculations. But like, if they're doing it off chain, then like my guess is there's like a way to do it, or not. Yeah, my guess is there's a way to do it on chain, and like it's going to take some like ingenuity, but like my guess is it's probably doable.
Yeah. Okay. Jim, thank you so much for coming on. This was very fun, to the point that I'm going to ask you probably again. And
dude, let's do it. I mean, I've literally been hitting the slots, literally waiting for this invite. It took forever. In case you're wondering how long it takes to get invited to the 0xResearch.
Is there on like 800 slot stickers for context? But
it takes 800 times. You have to send 800 times. So if anyone's in the chat, please hit the slot machine 800 times in a row right now, and you are the next guest on 0xResearch.
So this was really fun. I appreciate you coming on, and I appreciate you coming on despite me not sending you questions. There is a reason for that, and the reason for that is that I think it's much better if I already have the questions in my mind. I think it makes much more sense if we're doing one-to-one conversationally. So I hope you didn't mind it too much.
The reason is that he didn't prepare anything, so we just
not questions. I didn't know what the topic of conversation was going to be.
We do it live.
Also kind of fun.
Yeah, he didn't think about it until you shut up. That's why.
I pulled it all up.
Well, thanks for having me, guys. I appreciate it. A big fan.
Thanks for coming on.
The chat is one of the best chats like I've ever been in, so it's amazing. I spend too much time in it, but like that's just
okay. Outsource all work to Dougie. Just send in the slot stickers. That's it.
Dougie, get to work. No, he's not even there. But yeah, thanks a lot.
Awesome.
Thank you.
Thanks for coming on, Jim.
See you guys.
Big day for us today.
All right. We said we were going to take some risks. I don't know if we took enough risks, so we'll have to have him on again.
That's just kind of what I do to stress people out. I did I can't make this joke live, but I'll tell you about it in private. This
I
is not
promise you guys,
related
it's
to
going to be
Figma
really
stuff.
funny.
This is related to something completely different. Okay. Danny,
now
shall
for
I close
something.
us out? We should also let Will go because I'm pretty sure he wants to. It's Friday night. I'm pretty sure he just wants
Yeah,
to fuck.
producer wants to get out on the streets. He doesn't want to be hearing about crypto options. He's
That's
fucking
very-
bored of that. Yeah, close it up. Say what you want to say.
Guys, thank you so much for. Oh, that's you. Wait, can you just mimic me? No, Danny, go back. There
Yep.
we go. Guys, thank you so much for coming on today. This was extremely fun. To all of our listeners, thank you so much for listening to us. We will see you live again on Monday. We have a big episode with Alana Levine from Variant, which will be super fun. Once again, thank you so much for listening and have a nice weekend. Peace.
You have to do the